Hi everyone, I'm James Harte from littlefishfx.com and thank you for joining me for this week's live analysis session. We've actually taken a bit of a break recently from doing the weekly analysis sessions. Just over the summer period while markets are a little bit quieter, we're going to keep to doing these analysis sessions ahead of major events such as central bank rate decisions. So the focus of this week's analysis session is of course the BOE meeting tomorrow, and this is the first one since we had that Brexit decision at the end of last month. And it's been a busy period really, with a series of volatile developments informing moves and positioning since that point. So ahead of looking at the meeting itself, let's quickly recap some of the key developments that we've seen post-Brexit. Obviously, in the immediate aftermath of the results being announced, we heard from BOE Governor Carney, who took to the wires announcing that the Bank of England stood ready to provide extra capital to cushion markets. Since then, we've also had the release of the BOE's Financial Stability Report, and this saw the announcement of the reduction in counter-cyclical buffer rates applied to banks in an effort to free up to £105 billion for lending. Now, during this release, we also heard Carney noting that the decline in sterling was a normal function of markets, but he also warned that sustained capital outflows could lead to a continued undesirable decline in sterling. We then also heard in a second televised address the BOE governor noting that uncertainty was likely to remain elevated for some time, and the bank would now continue liquidity auctions for banks on a weekly rather than monthly basis, alongside considering a host of other measures. Finally, Carney noted that the economic outlook has deteriorated and some monetary policy easing will be likely over the summer, as well as saying that in August, we will also discuss further the range of instruments at our disposal. So these remarks prompted a further sell-off in sterling as markets moved to attach higher pricing to a summer rate hike. Carney has actually come under a lot of scrutiny in recent days, with allegations that he was coached by the government to essentially scare the electorate into voting for a Remain decision by exaggerating warnings of the economic damage that Britain was likely to incur as a result of Brexit. Now, Carney defended himself, saying that he thoroughly denies this and stated that the views of the FPC are the views of the FPC and not prejudged or pre-decided. Referring then to the reduction in bank buffer rates, Carney said that the move is not expected to be a silver bullet, but that it would help send the message to businesses and households that banks did have money to lend and that there would be no repeat of the 2008-2009 credit crisis. And Carney reiterated that the BOE has the tools to ensure that both monetary and financial stability persist, and noted also that the weakened sterling exchange rate could actually have some positive effects, i.e. reducing the current account deficit in the UK by about a third. So in terms of the market reaction then that we've seen in response not only to Brexit, but also to the subsequent comments and releases. So initially you can see that sterling fell by over 11% down to the initial post-Brexit low. We then bottomed out at over 13% to the downside, forming this low here, before over the last couple of days you can see that we've actually staged a small 2% recovery. So the large initial shock move was fairly limited in terms of duration. So we saw a 2-day response providing the majority of the decline, followed by some shallower continuation to the downside in response to these talks of a summer rate cut and the lowering of the counter-cyclical buffer rates for banks. So with a rate cut priced in at this point and the official process for the UK leaving the EU yet to commence, at this stage, it's going to take rather a significant catalyst to provide an extension of this move. And as profit taking has emerged on GBP shorts, there is a lot of debate and discussion about what action the BOE is likely to take this time around. Now, opinions and forecasts are widely split currently, ranging from keeping rates on hold and allowing more time to elapse to assess the damage, to cutting rates by a small 25 basis points with the option to cut again in the summer, or an immediate 50 basis points cut now to act immediately and decisively. So far from where we were pre-referendum, when the BOE was looking to guide markets as to when rates were likely to rise again, markets are now left in little mystery as to the timing of a rate move, but are now considering a move in the opposite direction. And the only question that remains really concerns the scale of the moves to come. Now, in terms of gauging the market expectations and likely reaction to tomorrow's meeting, despite a lot of preemptive rhetoric by the BOE chief and indeed market pricing, with the rate swaps market pricing a 60% probability of at least a 25 basis point cut in July, the majority of analysts polled recently by Reuters ahead of the BOE rates decision tomorrow actually suggest that the BOE will choose to keep rates on hold this time around and instead opt for the more detailed August forecast point to make its decision. Now, the first data which will give a glimpse into the UK economic condition post-Brexit will be data from mid-July, and waiting until August allows them to properly assess the situation instead of risking potentially responding in an unnecessary way and causing further FX devaluation, which Carney obviously warned about. It's a fine line, though. If the BOE does decide to keep rates on hold, it risks damaging its credibility in the market and perhaps suffering a sharp reaction, such as we saw with the euro in response to the ECB meeting of December 2015, where Draghi basically overpromised and under-delivered. Now, this line of thinking suggests that the MPC will look to deliver some level of easing at tomorrow's meeting, such as a small 25 basis points reduction, accompanied by a clear signal of the scale of action that we might expect from the BOE in August, with most forecasting rate cuts alongside further QE to be announced at that meeting. The key focus here, however, is definitely on the future guidance at this stage. So a 25 basis point cut is priced in and is likely to have little impact. And really, it's going to come down to what Carney signals about the August meeting and how he guides markets going forward. Carney's swift and decisive declaration of intent to ease may have worked to calm markets in the short term, but if he now fails to adequately deliver on those sentiments, he could find himself in a tight spot. And if markets get any sense of him backpedaling on these sentiments, then we could see an adverse reaction. Now, the moves that we saw in response to Carney's initial mention of additional stimulus following Brexit saw a sharp move lower in sterling, and this suggests that should such stimulus materialize, there would likely be plenty of scope for further downside. And current positioning data also shows plenty of scope for further downside positions to be added. So, going back to the case for and against a rate cut tomorrow. The case for an imminent rate cut is that it would be consistent then with discussions concerning the restarting of QE purchases, potentially around the time of the November 16 inflation report, alongside other measures aimed at boosting the flow of lending to the real economy. The case against an imminent move, rather, is simply that the BOE are yet to see survey data, let alone any hard data referring to this post-Brexit period, and so would likely prefer to make a more informed decision in August. So with that in mind then, let's take a look at the chart and scope out any potential opportunities ahead of tomorrow's event. So looking at cable first of all then, you can clearly see the scope of the current bounce from the lows. We've retraced back up to the first key hurdle in this chart with both the initial post-Brexit low and consolidation here. And also we have 23.6% retracement from the lows, from the pre-Brexit high rather. This is where we're currently stalled, okay? So we traded back up into this key Fibonacci resistance level combined with this key structural resistance, and this is where we're stalled. So whilst price remains below this level, whilst price is contained here by the 133.40s mark, then focus remains on the downside here. Now, if Carney surprises tomorrow with either more than a 25 basis point cut or signals to market regarding further easing, then we're likely to see a rotation lower from this point. And if we drop down onto the H4 chart, so if we drop down into the H4 chart here, then the first support zone that we're going to be looking at from this level is this zone here, these previous highs. So this was the broken base in sterling from which we saw the breakout higher at the start of this week. So you can see that we have 3 or 4 really good touches of this level. So this is likely to be a pretty decent level of support if cable trades back down here. And really, depending on what we get from the BOE meeting tomorrow, what we might actually see is a rotation back down into this support level, and then for this level to hold, and then essentially for price to remain pretty much range bound between these highs and these lows ahead of that August meeting. Now, the key technical note to point out here is that if we do trade back down into this level and we do hold, then we do actually have something of an inverse head and shoulders pattern formed at that level. So if we do trade back down into this level and hold, we potentially got the right shoulder of this inverse head and shoulders pattern, which would actually suggest that we're going to trade higher. So definitely something to keep an eye on if we trade into this level and hold, because that could portend further upside in cable and be a good heads up as to a likely reversal. Now, alternatively, if Carney fails to sink sterling tomorrow and we actually see an upside move, well, essentially it's going to be easier to play that move on lower time frame breaks. You can see the manner in which this move has played out so far has been pretty repetitive, with phases of expansion followed by small periods of consolidation, further expansion, small periods of consolidation. So if we do get a catalyst for upside momentum tomorrow, then it's likely that that move continues in the same way. Now, one thing to keep an eye on with that in mind is the weekly candle, because we're actually looking at quite an interesting weekly close here so far. So you can see that currently price has traded back up to retest last week's highs. And if we actually close out above those highs, we'll have a pretty nice bullish engulfing candle on the weekly, which could signal further upside to come. So going to be interesting to keep an eye on that weekly close following the BOE decision tomorrow. And if we do close above the 133.40s mark, then that candle definitely suggests that we could see some further upside. So in terms of looking at upside levels then, if we do get any protracted upside on the back of tomorrow's event, the one level that I'm really looking at more than any others is actually this 38.40s mark up here, trading up to the 139.40s mark. So you can see that we have really good structural resistance there at that previous 2016 low. We also have confluence with the 50% Fibonacci retracement level. And then we also have confluence with this key symmetry resistance. So the length of the last retracement would be equal to a move from the current lows back up into that level. So if price does sustain a move up into this level, this is definitely an area where I'd expect to see some significant selling interest emerge and a resumption of the long-term downtrend in cable. So that's what we're looking at in cable. Those are the levels. We've got a downside break focusing on support at the roughly 130 to 130.40 mark, forming a potential inverse head and shoulders. A breakout above 133.40 target to move up to the 38.2% retracement from pre-Brexit highs and that initial post-Brexit close at the 136.50 mark, and then above there we've got the 138.40 to 139.40, which is the previous 2016 low, the 50% retracement from the pre-Brexit high, and this symmetry resistance. So those are the levels I'm looking at with cable. Let's move on then to the sterling yen. And sterling yen has been a really interesting chart because we've had the dual aspect here of broad sterling strength combined with broad Japanese yen weakness. And this has delivered quite an explosive week. You can see that yesterday's daily candle actually came in at over 600 pips. So this has been a brutal rally for any late shorts in this chart. Obviously, the re-election of Japanese Prime Minister Shinzo Abe this week to the upper house has seen a surge in market expectations for Bank of Japan easing. So Prime Minister Abe announced shortly after his victory that he was ordering further easing, and speculation as to the size and the scale of that easing has been rife ever since. We also had former Fed Chair Bernanke flying out to visit Bank of Japan Chief Kuroda this week, which prompted further speculation. So ahead of the Bank of Japan's July 29th meeting, we're seeing quite a vicious sell-off in sterling yen as market positions for further Japanese easing and the likelihood of yet further unconventional measures being enacted. So really, any sterling upside that we see on the back of tomorrow's event is probably best expressed through this pair. Now you can see that we're currently stalled at an important technical level. So this was the post-Brexit reaction high. So this marked the top of the initial recovery following Brexit before market turned down to make that last low. So we're currently stalled at this level. Now, if we get a breakout above this level tomorrow, then the next clear technical level is really a decent way away at 146. And that might look quite far away currently, but bearing in mind that we've just covered 1,000 pips in the last 2 days, it really could come quite quickly. So if we do get a breakout above this current level, above this current 139 or 139.40s high, if we get a breakout above that level, then the target really is this 146 level. Now that's not to say that we're going to get there, okay? The post-Brexit landscape is obviously quite fluid and there's always a lot of news risk around the corner, but after such a huge parabolic shift in the market, such as we've seen in these sterling pairs, we're only really left with a few levels to highlight. And so if we do break this current level, then the next level I would be looking at is that 145.36 level. Now to the downside then, if we fail tomorrow and we turn lower, then the level which really stands out as being clear support in sterling yen is this 133.25s level. So if price trades back down to that level, I'm expecting that that level, having been the initial post-Brexit low and the start of this period of consolidation before the last downturn, is actually going to yield some decent buying. And again, similar to what we saw with cable, if price does trade down into that level, we could be seeing a potential right shoulder of an inverse head and shoulders pattern. And so at that stage, this current 139 level would actually form the neckline of that inverse head and shoulders. So some interesting levels in the sterling yen. Again, if we break the 139 to the upside, then we're looking for 145. And if we break current levels and trade lower, 133.20s I'm expecting to be decent support. Okay, so looking ahead then to sterling against the commodity currencies, and we're looking at a pretty similar pattern in each of these commodity currencies at the moment, where the current sterling bounce has seen price marking a decent retrace higher, but we've currently stalled out and we're now potentially putting in some interesting reversal candles ahead of tomorrow's meeting. Now, it's going to be interesting to see where these candles close tonight. However, I'm not going to be looking to position ahead of this event tomorrow. I think the outcome is too finely split and the reaction is a little unpredictable at this stage, beyond anticipating that we're going to see a rally if the BOE fails to deliver and fails to convince markets, and we're likely to see a sell-off if they do deliver and if they do convince markets. But the scale and the extent of these moves is the variable at this point. Now, commodity currencies have been big beneficiaries in recent days as risk markets have rallied across the board, deriving support from a few components. We've got boosted easing expectations attached to Japan and the UK, and we've also had a steadying of political stability in the UK with the arrival of new UK Prime Minister Theresa May. So if we do get a clear sign of easing tomorrow, then the subsequent rally in risk markets might actually temper upside in these pairs. Now, the Sterling Aussie is at an interesting level here. You can see if we go out to the weekly chart that we've just traded down into this big multi-year double bottom. So the 172.04 mark actually marks a 3-year double bottom. We pierced it slightly, but then we've got a typical run and reverse. So we got some volatility at that level where price shot down beneath it, and we then just as quickly reversed back above it. So whilst we're holding above this level and price is respecting that low, then we can expect that we're going to get some further upside. However, we've also got, in line with this, we've got speculation regarding potential further Australian easing to come, with the RBA having recently kept rates on hold whilst highlighting the potential for further policy adjustment if warranted. And recent political developments in Australia have also increased the likelihood of further RBA easing, with political deadlock in the Australian elections reducing the chances of corporate tax cuts being pushed through, and thus placing the onus on the RBA to stimulate the economy. So the sterling Aussie chart at the moment could be an interesting one, where although we're seeing a potential stalling of the retrace and some reversal candles putting in, we are at a major technical level in the sterling Aussie. This is a huge multi-year double bottom. And so I would expect at least a little bit of backing and filling here and a retesting of these lows, but not necessarily a breakdown. And again, whilst we hold above that level, then we could anticipate that we're going to see some further upside. Okay, sterling CAD then, and again, it's a similar picture in the sterling CAD. You can see that the current bounce is pausing for now, and we have a potential bearish pin bar in place. And not much else to say about the sterling CAD chart. Again, very similar to what we're seeing with the sterling Kiwi and the sterling Aussie, but one really great level to highlight at this point, which again is obviously a way above market at the moment. But given the scale of current moves, we don't know just how quickly we could get there, is this 181.20s level. So this was the initial 2016 low. It was the pre-Brexit low, and you can see that we have a really solid level of support here with these three big lows. So if price does trade back up into that level, again, I would expect that we see some decent selling interest emerge there, and this could certainly be a level to look to position into, playing for a continuation of this broader downtrend that the pair has been trading in. Moving on to the sterling Swiss then, and this is a little more of an interesting chart really, because there are a few key technical notes to point out here. So first of all, you can see that we just traded down on the back of that Brexit move into the S&B peg removal low close rather of 2015. Okay, so this current 129.70 mark is the level at which we closed that day. So we've technically formed a big double bottom here. If you look at the chart on a closing basis, you can see that we formed a big double bottom. We pierced it slightly, but we've since come back above it. So again, like we saw with the sterling Aussie, we traded into a big double bottom and we're holding above it. So for now, that suggests that whilst price respects that low, we could expect some continued upside. Okay, adding further support to this idea is the fact that we've also traded into big bearish channel support. So the bearish channel running from last summer's highs, you can see we recently traded into that, pierced it initially, but then have since come back up and traded above it. So if price does hold above this current 129.70 low close, the S&B peg removal low close, and we anticipate we're going to get further upside, then what we could see emerge here really is just a better level to sell at, anticipating resumption of this trend and an eventual break lower. And the levels that I'd be looking at to trade this idea are initially this 134 level, 134.20s level rather, which was that initial 2016 low. So this is a big technical zone for the sterling Swiss, and if we trade back up there, that's likely to yield decent selling interest. So I'll certainly be keeping an eye on price action if and when we trade into that level. And then beyond that, obviously, a trade up into the bearish channel resistance line, which could prove to be the ultimate resistance in this reaction higher. And that would be the point at which, again, I'd be monitoring price action, looking for a trade lower. So definitely some interesting levels to keep an eye on with the sterling Swiss, and it's going to be fascinating to see what happens on the back of the BOE meeting tomorrow and how this pair plays out. And then finally, the euro sterling. Okay, euro sterling, similar story to sterling versus the commodity currencies, obviously just inverted. So we're currently pulling back from those post-Brexit highs, stalling and putting in a small bullish reversal candle. Yet we're still quite a way above the pre-Brexit highs, which if tested should yield decent support. So you can see this level here at around 80.70 to 81 was the pre-Brexit high. And if we do trade back down into that level, we've also got some decent Fibonacci support in that level, confluence with the 50% Fibonacci retracement. So if we trade back down to that level, that's likely to be an area where we see some support and a further move to the top side. But the key thing for me with euro sterling right now is actually going to be not the daily close or the weekly close, but the monthly close. So the July close is going to be a key indication to me of where this market is heading. You can see going out onto the monthly chart that we recently traded up into a long-term bearish resistance line. Okay, so this bearish trend line running from 2008 period, We've had 3 solid touches at that level. We since traded up into it, pierced it on the back of those Brexit moves, but then reversed sharply and closed back beneath it. And now what we actually might see at this monthly close at the end of July is a large bearish pin bar. So this would be a good indication to me, okay? A large bearish reversal candle on the monthly time frames at a key long-term resistance level would signal to me that we're at least going to correct back down into that pre-Brexit high at around 80.60 to 81. So this is going to be a key indication to me of where this market is heading. Obviously, we've got quite a way to go towards the end of the month, but it's important to highlight these aspects ahead of time so that you can properly assess the situation. So looking ahead then, if we get that close below the bearish trend line and we get that monthly pin bar close, then I'm going to be anticipating a correction lower in euro sterling. And actually, we're going to see this on quite a few charts. The cable chart is potentially putting in a bullish pin bar on the monthly chart also. Sterling yen, same situation, potential big, large bullish pin bar, and then sterling CAD also. So a few key technical elements there to be considering. So that's the story ahead of the Bank of England July meeting tomorrow. Some interesting levels to look at. And as I say, going to be fascinating to see what the BOE decide to do tomorrow, but more importantly, how the markets interpret any action tomorrow or any further guidance and what reaction we see from the markets. So I hope that's been helpful, and I'll catch up with you all next time. If you are trading tomorrow, make sure to be cautious as we could be in for a lot of volatility. So good luck, and I'll catch up with you all next time. And in the meantime, please head to the website www.littlefishfx.com. You can check out our daily trade alerts, which are up 3,100 pips since November 2015. We just closed out over 600 pip winning month in June. So if you're interested in getting those trade alerts, you can see that we've got a coupon here for 10% off LFX Street 16, and look forward to catching up with you all next time. Take care.